So, friends, we see this. We are in the midst of a kind of second crisis, also possibly a lockdown. It's already happening in parts of Maharashtra, even the national capital. And at the same time, you've got a strange phenomenon. The capital markets have gone through the roof, and money seems to be sloshing around. So, is it that the real economy is doing inversely proportionally to the market? This is a question. We have more billionaires. Most billionaires have added wealth. As we know, the Adani Group added $50 billion last fiscal, which is a huge amount, making, I think, Mr. Gautam Adani the second richest man in India, if I'm not mistaken, according to the Forbes list, after Mukesh Ambani ji. Anyhow, and we also see, I was just watching CNBC this morning, and there was an interview with a leading Chinese economist. The Chinese growth rate is pegged at 20%. And even if you minus the 7%, because obviously, there were minus. So even if you deduct the 7%, it's still 13%. Indian growth rate is predicted to be in double digits also. Again, it's the same little bit of jugglery. If your economy shrinks one year and then you grow by 15%, then you've got to factor the shrinkage. But even so, manufacturing is up, and in most industries, power consumption is up, oil consumption is up. Most of these indicators, metals are going through an uptick as well. So we are in strange times, and at the same at the same time, people are predicting that inflation is going to go up. The rupee is at its lowest for a while, for several months. It's, I think, crossed 75 to a dollar. And I'm just throwing out these facts, which many of us know, because I want Ananta to make sense of them. That is my point. And the last thing I wanted to bring in is that you know when we were reading economics, which of course we didn't read much of as students of literature, just out of interest, I always remember what Schumpeter said, that capitalism also destroys wealth. It not only creates wealth, and Kondratiev and others have talked about these cycles. What is it exactly that we are going through just now? What is the prognosis for the Indian economy in the months to come? I think that Ananta already said the glass is half full, not half empty, and that some of the positive indicators are going to persist through the second wave. And hopefully, the second wave will also run its course over the next few weeks, though they say it's a double mutant. But I think Indians are tremendously resilient. And I think that with the vaccination being ramped up, with new vaccines being imported, as well as the natural resilience, of course, even one life lost is one too many. We really, really mourn for those we've lost, and some of them are very young people. But still, you have to take, a more dispassionate view as an economist. And I now request Ananta to guide us and to tell us what things look like. Thank you, Ananta. Thank you. I personally thank you for joining us. You're most welcome to Indian Institute of Advanced Study, though virtually. We hope you come
Yes,
in person
yes.
soon.
Thank you, Makaran, for those wonderful words of introduction. In fact, yes, I agree with you that this is a virtual visit, and I would like to make it a real visit sometime very soon. And also, I'm very glad that Makaran got his a doctorate degree in English literature, because if he had got it in economics, he would have made many of us unemployed. Because he gave a very good tour de force of all the issues that are currently occupying our minds in the macro space, both in India and globally as well. That was an excellent introduction. And as Makaran correctly mentioned, the most important item on my CV is the fact that I'm a good friend of Dr. Makaran Paranchpai. So that is the most important entry in my CV. So with those, and thank you, and thanks to the Indian Institute of Advanced Studies for having me here. And yes, I am aware that the second wave is upon us at the moment as we speak. But we should also keep our perspective in the sense that India isn't the only country that is experiencing a second wave. Many others have experienced even multiple waves. And as we speak, Japan, which again has handled the pandemic quite well, is also contemplating a potential cancellation of the Olympic Games this summer because there is a second wave over there as well. So I think many commentators also use the opportunity to sort of score some other debating points with respect to India's second wave. And as Makaran pointed out in his introductory remarks, I call India's glass not only half full, but in fact, I even go to the extent of saying more than half full. And people who regularly read me normally know that I am not given to hyperbole, and I don't, in fact, stress the positives because I think I kind of personally believe that Intel's Andy Grove at the past CEO got it quite right in the sense that only the paranoid survive. So in that sense, I always focus on the risk factors rather than the positive aspects because the positive aspects will take care of themselves and humans know how to take advantage of the positive circumstances. Sometimes we tend to become complacent and overlook the risk factors. That is why all along in my career as an investment strategist for many banks and also in my commentary, I tend to point out what could go wrong. However, there are times when we need to understand because when everybody is focused on what could go wrong, it requires some people to focus on what is actually going right as well. Therefore, in the current presentation, I am perhaps adopting a slight change in tack, and I am going to focus on what is going right as well for India. Not to mention the fact that in a country of this size and with this transformation, there will always be things to do. After all, economist Joan Robinson had said, whatever you say about India, the opposite is equally true. So in that sense, there will be plenty of challenges, which I will be flagging as well. So without much further ado, I'm going to share my PowerPoint with you, and we will take it from there. I'm just going. Just 1 second. I'm just opening my PPT, which I thought I had kept it open, but I think mistakenly I had closed it. So my apologies. So I'm just opening it. Okay. It's coming online. So give me a few seconds here. We all okay. I think are you able to see the video? Okay, thank you, Makaran. So glass is more than half full. I had prepared these headers well before the second wave happened, and in fact, I would reassure you by saying that the second wave of the pandemic hasn't made me change my header. So in that sense, so let me then move on to the next page. Just trying to think how I move to the next page. Okay. Okay, if I do page down, I hope it goes. Just trying to figure out how to do the page down. Okay. Okay, there I am. I got it. Thank you very much. Okay, so here we are. Just to give you a quick overview of where we are, as of March 2020, last year, we had our GDP in Indian rupee term. Just to make it easy for you, you can think of it as 200 lakh crores. So now we are going to end the year March 21, and as per the National Statistical Office, NSO, we are close to 196 lakh crores. This is nominal terms at current prices, but if you look at the constant prices based on 2011-12, which is where the real GDP is calculated, we have come down from 146 lakh crores down to 134 lakh crores, roughly translating into about 8% contraction on the real GDP. And this is where we are based on the current estimates. Okay, so that is to give you So has India done very poorly in the last few years? Because the commentary is that Indian GDP has slowed down. We had a 25% GDP contraction in the first quarter of 2021, etc. Let's kind of go back a little bit in history and put things in perspective. So if you look at the first decade of the new millennium, the blue bar, and the second decade of the new millennium, so GDP per capita in dollar terms kind of tells you that India grew on an average at 12% in dollar terms every year in the first decade, dropping to as low as 3% in the second decade. And you compare to other countries, we were one of the laggards. These are all Asian countries. So India, on the face of it, has had a disappointing second decade, according to many observers. But as always, there are three kinds of lies: damn lies, and statistics. So we need to peer behind these numbers. So let's go into the story. So if you exclude the first 3 years of the new millennium, and I'm not doing it for the second decade, and I'm not doing it for political reasons, it's simply because the first 3 years were the years in which the Indian rupee actually depreciated substantially against the US dollar. So if you take those years out of the picture, 3% average GDP growth per capita in dollar terms suddenly becomes 6%. So you can imagine out of 10 years, the first 3 years have made a major contribution to dragging down India's average annual per capita GDP growth in dollar terms by more than 50%. So that is one of the factors I want you to keep in mind. It depends on, therefore, what you wish to establish. Now, if you compare not the Asian countries, but let's say you compare India to other leading emerging economies in the world outside of Asia, Brazil, Turkey, Mexico, including, of course, Malaysia from Asia, South Africa, etc., you look at these time periods. The first decade, where India has done very well. The second decade, India still isn't particularly bad. But if you look at 2014 to 20, the last 6 years, excluding the first 3 years, India actually is a star. Among these 6 countries, India is a star. So again, the point is whether we are comparing India to a country which is comparable in terms of development, or are we comparing India to Bangladesh and Vietnam, which are probably 10, 20 years behind in terms of the development path. So that naturally, when you are starting from a low base, the catch-up period can be very fast, and also the catch-up growth rates can be very fast. So that is the point I'm trying to make here. And I also want to show you here, I have taken the first 20 years of the decade of this new millennium, my apologies, and I look at how the Indian rupee has performed against the US dollar in these 20 years. Now, the bars below the zero line indicate rupee strengthening against the dollar. The bars above the zero line indicate dollar strengthening. So when I say dollar strengthening, rupee going from 45 to 50 to 55 to 60, which means you shell out more rupees to buy a dollar. But if the rupee appreciates from 45 to 38, 36, 35, and so on, which means the rupee is becoming stronger and it is a negative change on the exchange rate, which is therefore the below zero line. So what is important here is that in the first decade, 7 out of 10 years, the Indian rupee actually strengthened. You can count the number of bars below zero. In the second decade, 2011 to 20, only 1 out of 10 years, the Indian rupee appreciated against the US dollar, and that too in 2018. In fact, I will come back to it later. The reason why the rupee appreciated in 2018 against the US dollar, you can see the positive bar there, which is a big one. Okay, in 2018, sorry, the negative bar, which is below zero, the rupee appreciated only once in the second decade. That was the year when the Reserve Bank of India was raising interest rates in India, and that was barely 1.5 years after the demonetization happened. There was a non-banking financial corporation called IL&FS that had collapsed. And the Federal Reserve was also trying to raise interest rates in the United States. So normally when the Federal Reserve is raising interest rates, the dollar will be strengthening. But here you have the Indian rupee, a developing country currency, appreciating in 2018, which means you can imagine the Reserve Bank of India was keeping a very, very tight policy stance, and that played a very big role in India's growth rate decelerating in 2018 and 2019, well before the COVID happened. So this is part of the story that doesn't get told because a lot of the emphasis is on demonetization, the introduction of GST, the introduction of the insolvency and bankruptcy code, all of which are very necessary structural changes for the economy, but which could have short-term repercussions because the economic participants need time to adjust to new regimes. But more than all of that, the fact that the central bank, Reserve Bank of India, did play a very disproportionate role in India's growth slowdown between 18 and 19 is not very well appreciated because in spite of the failure of IL&FS and demonetization impact, the Reserve Bank of India chose to keep interest rates much higher than they should have been. And that played a very big role in the GDP slowdown in 2018 and 19. So basically the point is, ladies and gentlemen, the first 3 years of the second decade, Indian rupee weakened substantially, and that contributes to India's mediocre performance for the entire decade, 2011 to 20. And more importantly, in 2018, we had the Reserve Bank of India playing a very, very restrictive role on the economy that also played its own part. Now, you look at the next 5 to 6 years, as per the IMF, the most recent forecast unveiled about 2 weeks ago, you can see they are predicting that the gray line shows you the Indian GDP in dollar terms rising to 4.5 trillion by 2026-27, all the way up to March 27. And in rupee terms, they are predicting that to go up to 390 or 380 lakh crores. Now, obviously, you can do a simple math and you can divide 380 or 90 by the 4.5 trillion and you will arrive at the exchange rate that the IMF is anticipating for the dollar rupee, which means they are expecting the rupee to steadily weaken against the dollar, going all the way towards 84, 85 the next 5-6 years. Now, if India experiences something similar to what happened in the first decade, the rupee appreciated then, it could actually repeat itself. If that is indeed the case, then India's dollar GDP would head towards $5 trillion very easily by March 2027, in about 5 to 6 years from now. So that is the possibility, in my opinion, that looks quite plausible, not just possible, but quite plausible as we head towards the remainder of this decade. This slide has too many words, my apologies for that, but I'll just read you key words and phrases from here. Basically, was the gloom exaggerated by firms and pundits alike? That is the last line in the first paragraph here. I want to focus on that. And the second one, bankers are astonished that even in the hotel sector, which is among the worst hit, not many firms have asked for a loan restructuring. Okay, that's the second paragraph. I want to highlight that. And the third paragraph, they say some of the better rated firms are able to access funds at low rates, low interest rates, even though the commercial paper market are using these services to service their loans. So basically, well-run firms are able to get reasonable financing at reasonable terms when they want loans. And then you say the shock is not as great as feared in the fourth paragraph. Okay. In not opting for loan restructuring, firms are signaling that we are over the hump. Now, this was published by CRISIL and a Business Standard article by Professor T.T. Ram Mohan of Indian Institute of Management, Ahmedabad. And he's a very independent, neutral, impartial observer of the Indian macro and the banking picture. And he wrote these things in December. Now, you might say the second wave could actually sort of derail some of these optimistic statements. But the point is, the second wave in many countries in the world which have already experienced it has been luckily relatively shorter, and the recovery of the decline in the infection rates have been quite rapid in those countries. And there is no reason to expect that India's trajectory would be different. The next slide shows you, again, this is not from Mr. T.T. Ram Mohan, but from a Bloomberg article. As the deadline of the restructuring, bank loan restructuring, banks were asked to restructure loans for borrowers in case they want to postpone repayment, etc. The demand for restructuring has been much lower than expected. 99% of the corporates that the CRISIL agency is rating didn't want restructuring. In fact, almost 66% of them were eligible, but only 1% were asking for restructuring. Small businesses also were not that interested in seeking rescheduling of their loan payments, etc. So by and large, even in the course of 2020, the Indian economy and the commercial sectors have turned out to be far more resilient, a point that Makaran made in his opening remarks as well, far more resilient than expected. Therefore, when you read another set of doomsday commentaries in the wake of the second wave, you should be able to see them in perspective, because when the first wave happened, we were not that sure about how this virus behaved. We didn't know how to treat it. We didn't have a vaccine. Now we have 1 year of experience behind us. We have a vaccine. We know how to put in place both pharmaceutical and non-pharmaceutical interventions now. And therefore, if these doomsday projections did not materialize, even last year, when things were far more unclear, now to expect that the doomsday would play itself out again, I think we should be very clear that we should not give in to undue pessimism. We should be cautious, but need not be unduly pessimistic. Now, this is from Credit Suisse, published in November 2020. What they are saying is, even in the pandemic year, the Indian corporate sector has improved its balance sheet. The interest cover ratio has improved. In fact, the share of debt held by loss-making companies was down to 23%. And they also show that the share of debt held by companies with the interest cover ratio less than 1 had dropped to 35%, the lowest ratio in 5 years. When you say interest cover, the amount of earnings you have to be able to pay your interest. And companies having an interest cover less than 1 means you are not in financially great shape. The share of such companies had dropped to the lowest in 5 years. Now, the reason why this is important to us is not because we are all stock market investors, but when companies have good financial health, they also tend to invest more in new capacity, etc., leading to employment generation down the road. And we will see that. And this is from the MSME sector, that shows that the COVID situation may not have impacted all sectors equally, but we can see that there is a large majority of MSMEs across sectors that are structurally strong and are better placed in current economic challenges, which is what captured by a SIDBI CIBIL MSME Pulse released in October last year. So, long story short, India in the first decade, if you look at the Indian GDP growth rate was 12%. We had seen it earlier. In 2012-20, it was around 5%. Now you can see between 2020 and 2027, which is what is the forecast, the average is going to again rise to about 9%. So basically what I'm saying is that the growth rates between India and the developed world is going to diverge, which means the GDP will converge. So the levels are going to converge, but the growth rates will diverge in our favor. And that is the point from this slide. And if you look at per capita basis, which is a standard measure of the average standard of living, again, in the first decade, you could see that India's per capita dollar GDP went up by almost 6% per annum, and it dropped to around 3.5% in the second decade, around 8 years, 2012-20. And now in the third decade, we are going to grow once again even much faster. And these are not projections made by Government of India, but actually made by the International Monetary Fund, that India will grow at 6.5%. Now, the important thing is, it's not as if we should sit back on our, comfortably and expect this GDP growth to happen spontaneously. There is a set of actions that India has to do, and I'm going to talk about them next. Okay. So, according to this table from the IMF report on Article 4 report on India, by the way, the latest one hasn't come out yet, which is a mystery. So, the last one we have is from December 2019 only. They see India's GDP potential growth, that is what is possible, rising slowly from 7% all the way up to 8% by the middle of this decade. And what is the good thing is that the kind of structural reforms, the Atmanirbhar Bharat packages that the finance minister announced in the course of 2020, culminating all the way in her budget of February 2021, do have the potential to make this 8% potential GDP growth average per annum a reality. And that is a good thing. So whatever assumptions that the IMF made in December 2019, when they made these projections, they have been in a way reinforced and validated by the set of policy measures that the government has unveiled. But the comparisons will always arise, and Makaran pointed out that in the first quarter of 2021, China's GDP, because of the base effect from last year, has rebounded 18% year on year. I mean, of course, India's GDP also will be rebounding in the course of this year. But in general, the feeling is one of despair when we look at this yawning gap between China's GDP and India's GDP in dollar terms. They were and we were almost together in 1991. 3 decades later, they are around $14 trillion. We are around $3 trillion or thereabouts. But wait, before we succumb to pessimism, let's get again perspectives. Now, the same yawning gap in the previous slide is replicated here. China's GDP now looks much smaller, the blue line, compared to the amount of debt that China has accumulated. So the GDP growth in the previous slide now is dwarfed by the amount of debt that China has accumulated. Therefore, if you scale India's GDP by the amount of debt that India has, and if you scale China's GDP by the amount of debt that China carries, then India's line is above the Chinese line. The orange color line is basically showing that effectively the point here is that our GDP may not be as big as China's, but our debt is also nowhere near as big as China's. In other words, if we also borrow as much as China has done, then we also could have grown to the same levels. But that is not a sustainable state of affairs for China, because there are many things that they got right, of course: infrastructure, primary education, secondary education, and their long-term focus. Now, there's nothing to belittle what China has achieved in the last 40 years in terms of getting its economy from where it was in 1979 to where it was by 2015 or so. No questions about that. But having said that, if you look ahead for the next 30, 40 years, India's outlook doesn't look as bad because we have not exhausted our ability to borrow and invest as they have. So I think it's important to keep in mind, once again, this presentation is all about the perspective, and that is what I want to leave with you.